In our next presentation, we will hear from Rohan again to take you through some of the concepts of export readiness and export ready. This session actually asks a pertinent question: is your business export ready or export capable? In our work at Pacific Trade Invest, we come across this, and we have to ask this question every day, every minute of every day, to those that we receive inquiries. As in our experience, a lot of companies, SMEs in the Pacific, come to us with a product wanting to export to New Zealand. Our responsibility to that company or to any company is to decipher, first of all, whether or not they're export ready. The exercise that Rohan will take you through this morning will hopefully give you some understanding of the difference between the two. So thank you, Rohan. The floor is yours for your 10 minutes.
Thank you, Glynis.
Are you running your presentation or is Ivy doing it?
Can you see my presentation?
No. Yep, now we can see it. Do you want to go to full screen? Yep, perfect.
Yep.
Thanks, Rohan.
Great. I'll just bear with me. I'll just move this across here. Okay, thank you, Glynis. Thank you, Alo. And it was really interesting that some of the things that you mentioned there illustrates how tough a journey it can be having your own business. And I've had my own business with large borrowings, and I fully understand with some of those, challenges which you mentioned. And some of that comes out in this survey here. So the survey was sent out, and thank you for the respondents who sent them all back in. And what the surveys try to do is to illustrate through the survey whether your business is export capable or export ready. And on the top part of it, where it says underneath, do you have the following? That is really establishing whether you're capable, export capable. And it goes through various questions like, is your product ready to export? Have you got a planned growth strategy? Have you got the commitment to grow the business into an export market? The commitment to become an exporter means actually you've got to get out to the market and visit the buyers and see whether it stacks up in terms of margin. Have you got a unique selling point? Also logistics. And then the next one is ability to assign financial resources. Now this you'll see in the survey results after this slide is a key obstacle or challenge. So it appears a lot of businesses go into this process, this pathway, but aren't capitalized enough to do that, whether it's for machinery, for production, or logistics, or other factors as well. And then the next one is understanding the company will need to require coaching in particular areas in the overseas markets that you're going to target, and also at a minimum, do you have marketing materials? And then the next step leads into the next stage with, okay, you're export ready. So you've got the export knowledge, you've got the export commitment, which is thorough, and then resources, again key, enough capital. Have you got the labor, export market logistics, a buyer, a market? And on the resources side, all the certification and documentation to enter the New Zealand market or other markets that you might be targeting. And then the supply capability. Quite a few times this has come up with some buyers that the supply at times can be inconsistent and the quality can be inconsistent. So that's a real opportunity to have a unique selling point. If you increase the quality and quantity as per the demand after the initial pipeline full, that can really work in your favour. Okay, so once again, thanks for all those that sent them in, the surveys, and let's have a look at the results. So out of the 16 that we received, this is focusing on the export capable side, which is the step before export ready. If you just look at the two arrows, which point to growth strategy, this is where the opportunity is, having a growth strategy and then moving across financial resources, which is consistent with what Ella was saying, and also Anthony Akoi when he comes on with his presentation. So the financial resources, like a lot of us go into this with a planned strategy, which is quite thin, but it can get us through. But the financial resources is absolutely key, and that needs to be thought through. And there's in-country service providers, which will be highlighted by Richard Busby from Pacific Business Link later tomorrow. So moving on to export ready. Similar picture, but not quite as strong. Once again, full, if we look at the two arrows, full export resources and the supply capability is the ones that we really need to focus on to be export ready. So that's the end of session 2. Any questions, please ask at the end, as Glenn has pointed out. So thank you.
Thanks, Rohan. I wonder if you could just go back to the checklist again.
This one?
Yes, that one. So I'd imagine that the key takeaway from this list, and I'm sure there could be other pertinent questions or criteria that we could, that could be listed here. But I guess in the Q&A session at the end, I'd be interested to hear from participants online their reactions to this, and particularly whether they actually have a process whereby they, they think through, or they take themselves through, or take their business through a checklist of their own to determine, or to give them some insights whether or not they consider themselves to be export capable or export ready. So that's number one. Number two is if you could just spend probably a couple of more minutes honing in on some of the key statements there. And from your perspective as a trade development manager for Pacific Trade Invest New Zealand, and you're using your background and knowledge, what would you say would be, if you were to put that list into a priority, what would be number 1 through to number, I don't know, 10 or 6?
Are you talking about the ready one at the bottom or the capable at the top?
Both.
Okay. So I think really, while the ready one at the bottom goes in more depth, I think if we look at the capable, I think a planned growth strategy would be number 1, assuming that you've got a product which is marketable in the market, and then after following that would be financial resources to enter the market. Now, I think that we've got cash flow and P&L templates, and they cover margin and costing. So I think that if you do a cash flow analysis with a P&L, and it's well thought out, and it's one consistent with the template that we've got, and it's consistent with, say, like a bank, for example, ANZ, the one that they use. If you go through in every bit of detail which they ask, and it'd only be 20 lines long, everything would be thought about from your pricing, your supply side on costings, how much you're going to sell. That means you've got to think about the market. You've got to think about all your operating expenses, whether it's overheads like rates or power or labour. If you're going to step up to export, how much extra labour that you might need, other costs like in-country documentation, logistics. So everything is covered off by those cash flow and P&L templates. So I think that would be the priority. And then secondly, if we go down to the export ready supply capability, it's really, really key, because we had this feedback a lot. The opportunity is quantity and quality. And then on moving aside from that, is really addressing what the customer or the buyer, what they need in terms of like initially a pipeline full and then the reorder quantity after that, and also their margin expectations as well. And that varies between the category and the product, and whether you're a new entrant and you're pitched high at the top end, and like, for example, organics. If you're doing lower volume, you're providing a higher margin. But if you're a brand leader and a volume driver, you can get away with a lower margin. But it's really interesting on the supply capability, and it'll be reflected in the financials as well, is that if you're going to target grocery, you need to be very, very mindful of the trade spend element. And that is like the cost of money to be in grocery. When I started in grocery, we could start at the volume drivers are 3. And by the time I moved into another category, in terms of trade had changed, we'd gone to net, that had gone to 40%. So those are the extreme levels of trade spend. And some businesses go in there and they get surprised at the cost of doing business. And it ranges from ullage to settlement to scan outer allowance to co-op fees, to in-store promoting. So it just needs to be really, really mindful. You need to be really, really mindful of those. So I hope that helps.